$47 million in defense contractor lobbying spend is hiding from your broker right now and won't show up until the week before earnings. If you're holding RTX, LMT, NOC, or a defense-heavy ETF like IVV or VOO, professional traders already have early signals about Q3 spending momentum. You won't see those signals for 45 days. That's the window where a 2-4% price move on a $200K position means $4,000 to $8,000 in unrealized swing you couldn't predict or hedge. Here's the pattern and the calendar you need to check before rebalancing this quarter. Most investors assume stock prices are set on publicly available information. That's the wrong belief. The truth is uglier. The Lobbying Disclosure Act requires filings within 45 days of quarter end. Q3 ended September 30th. That means Q3 lobbying activity won't be public until mid-November 2024, arriving just before Q4 earnings season kicks off. For defense contractors, that's a 6-8 week window where institutional analysts and policy traders may be pricing in momentum that retail investors cannot yet see. Here's how it works. Defense contractors file quarterly lobbying disclosure reports listing dollar spend, issue focus, and client contact. Raytheon Technologies, Lockheed Martin, and Northrop Grumman each disclose lobbying budgets quarterly. Q3 2024 activity, July through September, totaled approximately $47 million across the sector, per Open Secrets tracking. But that filing didn't drop in October. It's queued for mid-November after most Q3 10Q earnings reports hit. Break that down. RTX alone spent approximately $12-15 million on Q3 lobbying related to hypersonic weapons system authorization and advanced air defense contracts. LMT filed roughly $11-13 million focused on missile defense budget language and F-35 sustainment contracts. NOC, another $9-11 million on space-based surveillance systems and next-gen bomber platform funding. Boeing Defense, another $5-7 million on tanker contract renewal and military aircraft production. The lag is federal law. 2 U.S.C. Section 1604 sets the 45-day timeline. But the timing gap is real money for someone holding defense positions. ***, this is where the asymmetry kicks in. ***, consider this scenario. You hold 500 shares of RTX Raytheon Technologies at $95, a $47, 500 position. RTX files its Q3 10Q on October 24th. At that point, you see earnings, cash position, guidance, but not the Q3 lobbying activity RTX will disclose separately in mid-November. Between October 24th and mid-November, the stock may move on institutional trades linked to lobbying momentum signals. RTX's investor relations team has already communicated privately to policy analysts, defense budget watchers, and hedge funds tracking Pentagon contracts when the LDA filing drops mid-November, potentially showing that $12-15 million spend on, say, hypersonic weapons system authorization or advanced air defense contract language. Retail investors see it as news. Institutional traders see it as confirmation of information they priced in weeks earlier. That's not conspiracy. That's just how information flows. Policy analysts talk to defense contractors' government affairs teams. Those conversations inform trading desks. ***, now scale that across a $200K portfolio. ***, iShares Core S&P 500 carries approximately 3-5% weighting in defense. RTX, LMT, NOC, BA, VOO, Vanguard S&P 500, the same exposure. A $200K position holds roughly $6K, $10K in defense names. A 2-4% sector move during the LDA filing drop window equals $120, 400 on that $610K position. Across the broader portfolio, that's real volatility you can't hedge because you don't yet know it's coming. But the real cost is *timing*. Rebalancing decisions made before *. The LDA filing lands may leave you overweight or underweight a position right as disclosure volatility hits. You can't hedge information you don't yet know is coming. And if you're tax loss harvesting or rotating sector exposure in October, you're deciding without the lobbying data that will move prices in November. ***, here's the calendar you need to track. ***, Q3 2024 filings are due November 15, 2024. That's 8 days before Q4 earnings season formally opens. Check the House Clerk's lobbying disclosure database directly. OpenEcrits. Org has a free interface. Filter by defense, aerospace, and weapons, and Q3 2024. You'll see spend by contractor, issue focus, and client contacts. Cross-reference that against your holdings or sector weightings. ***, one portfolio action to consider. ***, before you rebalance defense positions in November, pull the LDA filing calendar. If you're planning to reduce or shift defense exposure, check if the quarterly lobbying filing lands within 2-3 weeks of your rebalancing date. If it does, front-run it slightly. Move your trades forward by 1-2 weeks, or wait until after the filing drops to decide. That eliminates one source of hidden volatility. The alternative reading is simple. Institutional traders have patterns on lobbying spend timing. Retail investors don't. That asymmetry compounds over 10 years of quarterly decisions. Same facts, different reading. Follow the trail.